Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 24th of September 2021 and we're producing our gold and silver morning update and price forecast. Gold and silver prices have now appeared to have chosen the direction they intend to follow. Unfortunately, it's continuing decline. We warned subscribers about this in a video we produced just after midday yesterday and published then at about 5 p.m. It's entitled Gold and Silver Under Pressure after FOMC announcement, and we strongly urge you to watch it, and we've placed a link to it below. So let's now take a look as to what's been happening and the main news stories of the day. Welcome to Illuminati Silver. It's Friday, 24th of September 2021, and it's ultra early for us. It's 08:18 a.m. GMT +1. Ultra early because we have to leave the house at 9 a.m. today for activities to do with a wedding. So basically, the weather, propitious. I shall say that again. The weather is propitious, meaning that it is promising and we may have some successful sun. Now, whether the news is propitious is another matter, because as we can see on the screen, ECB is lonelier than ever after a hawkish turn led by Fed. But the Bank of England opens the door for 2021 rate hike as inflation seen above 4%. We also have UK confidence falls as consumer brace for income squeeze, and the stocks are up. Futures are steady. Sovereign yields higher. So let's take a look at each of these in turn. First of all, the lonely ECB, the European Central Bank. With central banks from Washington to London this week signalling more alarm over faster inflation, the ultra-stimulative path of the Eurozone and some of its neighbours appears lonelier than ever. A collective move to look beyond the pandemic slump and towards the risk of accelerating prices emerged with a warning from the US Federal Reserve that it may taper bond buying soon, the prospect of higher interest rates as early as this year from the Bank of England, and at least 5 other hikes from central banks around the globe. That left a clear divergence on policy with the European Central Bank, where officials are still largely more worried about supporting the fragile recovery. They've been at pains to insist that a dial back in stimulus announced on September the 9th isn't the sort of tapering that may soon appear in the United States. Although it is not guaranteed, there has tended to be a relationship whereby when the euro rises against the dollar, we have seen gold and silver prices tending to rise. But when the euro weakens against the dollar, the opposite tends to occur because the dollar, relative terms, gains strength. And unless the European Central Bank does something, perhaps, or promises something more stringent, then we may very well see even greater dollar strength amongst the basket of currencies. Perhaps not necessarily against the sterling, because sterling, as we'll see in a moment, is likely to rise because of the proposed cuts in its QE program. It's an interesting one to watch and one we should watch very closely. And on that note, let's look at this. Bank of England opens the door for a 2021 rate hike as inflation is seen above 4%. So it's got 3 months potentially to raise rates. The Bank of England raised the prospect of hiking interest rates as soon as November to contain a surge in inflation, which it now expects will exceed 4% following a spike in energy prices. Noting the modest tightening in policy foreseen over its forecast horizon in August, some developments during the intervening period appear to have strengthened that case, although considerable uncertainties remain, the Monetary Policy Committee said in a statement on Thursday. The central bank also agreed that any future tightening should start with an interest rate increase, even if that became appropriate before its bond buying program finishes around the end of the year. 2 of the 9 MPC members pushed to end those purchases early, with Dave Ramsden making his first dissenting vote in 4 years on the panel. But we also have to bear in mind in the UK confidence falls as consumers brace for income squeeze. So not only have we got the prospect of rising interest rates, but we are aware of the proposed rises now in national insurance, or if you like, tax on people's incomes. UK consumer confidence fell at its sharpest pace since coronavirus lockdown rules were tightened almost a year ago, reflecting a surge in inflation and looming tax increases. September's 5-point drop to -13 was the biggest decline since October 2020, according to data from market research firm GfK. It came amid fears of a potential cost of living crisis, with households facing surging food and fuel costs, the end of furlough benefits, and a £12 billion tax rate from April to pay for health and social care. However, stock markets today expected to rise. Stocks and sovereign bond yields climbed Friday on optimism about the economic outlook, though uncertainty lingers about potential risks from the debt crisis at China's Evergrande Group. US and European futures were little changed after the S&P 500's biggest 2-day gain since July. The Wall Street advance was led by economically sensitive sectors like energy and financials, as investors embraced the view that a looming reduction in Federal Reserve stimulus shows confidence in the recovery of the pandemic. For those still investing in shares, it goes without saying that traditionally, whenever the prospect of rising rates come to the fore, financial stocks usually tend to do quite well. Looking at BBC News, petrol station closure sparks lorry driver row. Evergrande investors in the dark over an $83 million payment. Ministers weigh up visa changes to fix staff shortages. And BP, British Petroleum, closes some sites due to lorry driver shortage. So we can expect a bit of a petrol pump panic today after that headline. And in the United States, Capitol Riot Committee to investigate Trump allies, where at least 4 very senior Trump allies have been subpoenaed to provide documents and attend a congressional hearing, Steve Bannon being perhaps one of the better known of the 4. But so is Mark Meadows, Donald Trump's former chief of staff. So what's happening in the financial world? Well, dollars strengthened slightly over the last 24 hours and is at 93.17. Energy prices virtually unchanged, 2 cents up for WTI crude and 17 for Brent crude, 73.32 for WTI and 77.42 for Brent. Equity markets in America up broadly between 1 and 1.5%. Overnight in Asia, mixed bag again, Nikkei and Topics up 2%, but the Hang Seng down 1%. And UK and European markets actually taking a bit of a hit because of the prospect of rising rates, and broadly down 0.5%. US economic calendar. Well, yesterday we saw initial jobless claims coming in at 351,000. Now that, quite frankly, is a little worse than market expectations of 320,000. The market manufacturing PMI, the flash version, came in at 60.5, again lower than expectations, and the services flash PMIs came in again lower than expectations. That does not all go well for the economy, and which is why, to some degree, policymakers will accept the fact there'll be some form of tapering, but are cautious and concerned that they don't hit it too hard too soon. As we mentioned in a video we produced yesterday, watch out for early October's non-farm payroll report and, of course, retail spending. And today we basically have new home sales. But Jerome Powell will give some opening remarks as well, speaking to bankers, so it'll be interesting to hear those. So what's happened to gold? Well, we suggested it'll be under pressure, and it is down $12, standing at $17.54. Silver also under pressure is down 8 cents, standing at $22.68. While the cryptocurrency market is also down 0.6% at $1.98 trillion market cap. But as you can see here, you still have cryptocurrencies rising 461% in 24 hours. Black Pearl token 399%. It is a crazy, crazy world. Talking of crazy worlds, our videos. Now each morning we produce an update. Hopefully you find them useful. But yesterday afternoon at about 12:30 we produced an update while gold and silver were in marginal positive territory. But our view is it's going to be under further pressure. And we've seen that overnight with the prices coming back. And don't miss that video. It really, really does highlight why we believe the gold and silver prices still, unfortunately, if you hold them, fortunately, if you propose to buy them, have further to fall. That's it for now. Tomorrow we have our weekly update, which will be copied on Sunday. We're away for the weekend, so we will produce those videos, but we won't be producing any additional ones over Saturday and Sunday. Do look out for them. Hopefully we will be as accurate as we have been so far. Meanwhile, have a great day. Give us a thumbs up, subscribe, press the bell sign. Until next time. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.